Joining us now is Anindya Banerjee. He's Senior VP, Head of Research, Currency and Commodities Interest Rates at Kotak Securities. Anindya, hi. Thank you so much for joining in. And it's a week that has started with some bit of a profit-taking in gold and silver. But even before we get to that, and since you follow currencies very closely, the kind of appreciation that we've seen for the rupee, 85.75 at the last count, how are you looking at that?
Thank you for having me, Manisha. Indian rupee is playing a catch-up to what's happening to other currencies again, the US dollar. So US dollar index is down almost 7% from the this year's highs from mid-Jan. So Indian rupee is playing that catch-up, aided by the lack of selling from the FPIs in the equity market, a bit of inflows in debt. And especially, we are in the financial year end, and we tend to see a lot of selling from the exporters into the market. So all those factors in combination has created this nice rally in the Indian rupee against the dollar, and it may continue for a couple of weeks more.
And then there are all those reports about rupee going to 89 and 90 and 91 when it just went to 88 are now out of the whack. And as you said, you're looking at more appreciation going in. Is that the kind of scenario that we might see continuing for the rest of this year?
Manisha, this appreciation could be a short-term phenomena because the trade war threat is not over, and the reciprocal tariffs are set to kick in from April onwards. And we continue to expect that the trade war between China and US will intensify in the coming months and quarters, because the whole policy of the Trump administration is America first. So you can't have America first and globalization going hand in hand, because they're completely opposite. So we expect the trade war to intensify, and that can have a negative impact on emerging market currencies. But for the moment, next few weeks, let's enjoy the appreciation in the rupee.
All right, as you say, how are you looking at the gold and silver prices, and gold especially, because we've seen all-time highs and then some, restraint there, trading nearly $30 from those kind of highs. There's been a lot of investment buying, yes, the retail jewelry buying in India, China, not much to write home about. How are you looking at the prices? Is the high for the near term done for this too?
Right. So if we look at the COMEX positioning, so the CFTC report as of last Tuesday, that report clearly indicates that the speculative length has been at record levels. And that is one of the major reasons why over the past couple of sessions, we have seen a profit-taking dip. So we think that a bit of money could be rotating from precious metals into equities, because equities between Jan, Feb, and March had fallen down, and the precious metals has gone the opposite way. So a bit of money could be rotating. That is also causing this correction. But again, the medium-term outlook is quite bullish on gold and silver. So let's say on MCX around 86,000, 86,500 is a very strong base on gold. On silver, around, let's say, 96,000 to 96,500 is a very strong base. So we expect these levels where the long-term investor may come in and accumulate more. And over the medium term, we could see levels of 1 lakh or even 1,03,000 in silver, and 88,000, 89,000 on gold on MCX.
Point taken. I also want to talk about copper, because the kind of headlines this one seems to be making are more sustaining right now. We've seen 12% of gains on LME in this year, and we've seen 25% of gains on COMEX until time in sense of copper. The kind of price disparity that we have started to see with the US and China, both major consumers for the metal, and of course the rest of the world as well. How are you looking at that making sense to prices? Would you say much has been factored in, and from here on, what fundamentals will you watch out for, and what's your price sense?
Right. So one of the markers which a trader needs to watch now is the spread between LME and COMEX. That's currently hovering around 14%, because the market is factoring in the 25% possible tariffs on copper in America. So this spread is very important, because over the past 3-4 weeks, what we have seen as a spread has actually increased. The global prices of copper has also gone up. So that will be one particular marker which short-term traders should watch. If that spread starts to contract, it could be a sign that the immediate speculative buying is getting over. But as of now, copper is in a bull run, and we could see levels of 930 or even 940 on the MCX. that's our expectation.
Barring copper, any other metals that you have an eyesight on? Because we've seen aluminum prices hold firm. Zinc also did see some stronger fundamentals come in. At this point in time, slightly directionless in the trade, though.
So aluminium has had a fantastic run, as you said, yes. So rather than aluminium, I'd be actually focusing on zinc, because zinc has had a bit of a strong consolidation below the levels of 270 on MCX. So we could see levels of 295 to 300 over the next few weeks. So that will be one counter apart from copper where I could look for the upside bets.
A final word then on the crude oil prices, and we've seen 2 weeks of gains onto this one, and this is the third week that we're looking at prices almost steadying, holding well. One, of course, is the OPEC and allies. The second is what's happening with Israel and Gaza all over yet again.
Yes, in crude, actually, if you see that we don't have a very strong factor to create a trend, be it up or down. And around the 65, 66 levels, dollar a barrel on the WTI, it has formed a strong base in the last few years. Every time it has come there, it has bounced. So this time too, we have seen a bounce from around those levels. So we could see levels of, let's say, $71, $71.5 on the WTI. But nothing spectacular is expected here. It could continue to be in a broad range.
Okay.
All right, nothing spectacular expected in crude. That should do well for the Indian macros. Thank you so much for joining in, Anindya, and giving your views on a whole host of commodities. Manisha, for taking us through with that conversation as well. As we speak, these gas stocks are doing extremely well. GAIL is up 5%, but the most notable gainer in the last half an hour has been SML Isuzu, which after the news break continues to do well. Was a little volatile. Remember, the valuation that Mahindra is seeking as per Yatin's story is close to 1,400 to 1,500 rupees per share. The stock continues to surge higher and is now above that 1,738 odd mark itself. We call time on this edition of Halftime Report. Stay tuned. Business Lunch takes all the market action ahead.